Daughter in the city, rushing to me. Down upstream, are you with me? Round up, rainbow. Daughter in the city, rushing to me. Down upstream, are you with me? Feel it.
Good afternoon, everyone. BC Ridgefield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. A really big shout out to everybody joining us live this morning, as well as everybody that's in here watching on catch up later on. Craigie boy, how are we doing? Burnside, my friend, how is everybody doing this morning? Got a good vibe for the week ahead. I know it sounds a little bit strange maybe when we consider what's kind of on the plate, but we're just going to take a look at the geopolitical landscape as much as we can. Obviously far from experts in that, but we can decant the information that we can find. We're going to cover the news today. I want to take a little look at traditional markets. We need to know if we're framing a risk on, risk off environment. A lot of uncertainty in the markets at the moment. And obviously we're going to cover Bitcoin. We're going to cover Ethereum. We'll take a look at Solana. If you've got any other alts, we can take a little look through those as well. Do let me know in the chat and we'll take a look. Erica, how are you doing? Our lovely friend Erica. So guys, while a few more of you kind of come in, we're going to come back to the Bitcoin chart. I kind of try and move the news section a little bit later in the stream, so more of you have the chance to come in, because normally it takes about 5-10 minutes for us to get up to capacity. But I really do want to get through a lot of stuff today, so we're going to make a start here. All right. So as we can see, we're through on Monday, 23rd of June. The key focus, as always, is on the US market. Now, I get asked this question a lot, why the focus is on the US market. It's still by far the biggest market in the world. It's the US dollar is the world's reserve currency. Most countries do the majority of their trade with the United States. So therefore, it makes sense to have a look at them. They're kind of like the real gauge that we're looking at. Any major events affecting the US very, very often then affect the rest of the world. So if we're looking at what's in front of us today, Monday, 23rd of June, we've got this filtered down to the high impact news events. And we can see today we've got flash manufacturing PMI, flash services PMI, existing home sales as well. All right. So those things can always play a factor. Now, you need to remember a lot of this information gets priced on with the preliminary data. So you need to see some quite wide misses on this, but the market will be paying attention to this, especially if you're an intraday trader. So do stay aware. Tuesday, we can see we're rolling in here. So Fed Chair Powell testifying. So this is a lot more to do with, there's no set information. The rates have obviously been paused last week. That was priced into such a high percentage that, it was an expectation. Then there was the kind of, a fairly neutral speech, but we're looking to see if Powell says anything particularly dovish or hawkish through these. So dovish being akin to bullish, hawkish being akin to bearish. And obviously he has to answer a lot of questions about the decisions that the Fed have made. So there's always a chance for a little bit of expected volatility to come into that. We have CB consumer confidence coming up as well, the Richmond Manufacturing Index, which we're keeping an eye on. Through to Wednesday, we've still got Powell testifying. All right. So again, just remembering that can really kind of inject some volatility. And what you'll notice with these is this is happening. This is my time at 3 p.m. So the pre-market opens in the US for me at 1:30 p.m. and the market opens at 2:30 p.m. So you can see really at the start of the US trading hours, that's really there to inject some volatility. Through to Thursday, we can see a lot of news dropping on Thursday from final GDP, quarter-on-quarter unemployment claims, core durable good orders. We got durable good orders as well, final GDP price index quarter-on-quarter, and then pending home sales as well, before we finish up the week with core PCE price index. So again, if you're an intraday trader, which is what I focus the majority of my time on, then there's a lot of really, really key volatility drivers coming into the market today. So, this week. So do keep an eye on that. Obviously, I know this is a very crypto-focused program and crowd, so I can't imagine many of you are trading Forex, but if you are, then obviously there's really, really key events heading affecting everything from Canadian dollar, the yen, the euro, obviously, as you can see, as well as Aussie through the news today as well. So let's get back to the charts. Dump, not sure, mate. Let's take a look, shall we? Let's see. It's always very hard. Often dumps are, caused by fundamental factors, news drivers and stuff like that as well. But I'll certainly tell you what my thought process is, which is aligned with what was released in the Bitcoin report last night, which is shared with members at the Bird Nest. One of the trading team does that every single day, so you can keep up to date with what our thoughts are, the information that we're getting, that we're decanting, that help us make our decisions. I hate it here. How are we doing? Jesse, good morning, my friend. Good to have you back with us. So on a weekly scale, the reason that I'm just not looking to short into this, I think pretty much the exact thing I said last night was a bullish sign would be price recovering this low. Yeah, for the weekly close. Nice long tail wick coming into it, showing price was trying to drive down. Ultimately, we were targeting this low from here when we saw the rejection again at the prior all-time high, which is the thick red line above here. Price has now come back down to our area of interest here, as explained in the Bitcoin report. Here, we're looking for bounce longs, all right? This isn't the place to short. I would need to see a weekly close below this level here, showing me that this isn't doing its job. We look at the gaps, basically to get back involved with being long, right? So what you notice is the market moves typically between old highs, old lows, and then to rebalance gaps, all right? And then we're basically looking for what the reaction is within there. We're trying to ascertain whether the buyers and sellers are stronger. That's how we then formulate our kind of weekly and daily trading plans. So within this, there's not really much else to say. We got the reaction at the weekly low. Yeah, we had a sweep of that. We got a pretty equidistant set of wicks on this candle and a large bearish body. So we're obviously leaning that way, but still remembering that we're holding market structure here. All right. So look, still very bullish here on a weekly scale, but we need to kind of read into the nuance of this more. Obviously, the daily is going to tell us a fair bit more. So in terms of the daily, this would have been slightly more bullish if we'd seen less of an upside wick on this. It's a very long nose pin bar candle or hammer. So ideally, you want to see those with a little bit less of a nose, showing that there was a little bit of seller pushback here as well. But obviously the buyers did really step back in within the gap, and we've kind of reclaimed this level. So you can take this here, which is at 100,333 flat here on OKX anyway, and we can use that and say, okay, that's really kind of a key area of support here for me now, because price has come back down, swept out liquidity below the lows, comes back up, holds here, and then we look to go up. Okay, I don't know what I'm missing here, guys. ALHDZ and Kathy, hello, how are we doing? I don't know if I'm not in with the joke or maybe just not down with the cool kids. But look, daily scale looks really good as well. We've got overlaying gaps within here. We've cleared out the liquidity below these lows. Long downside wicks tell us that buyers are at least present at these levels. However, we can see, we're still a fair way away from any kind of structural recovery here. Price is ultimately just consolidating in this big range here. And if we kind of take this, if we're looking at this as the expansion and we're taking this across here for volume in terms of the profile, we can see we've lost the value area low here. We actually closed below it, retested it, and then we've kind of dumped. So price coming back within this area, yeah. So price coming back in, oh, it's not going to work with that, is it? It's going to look ugly as sin. So let's use this, but price coming back within the value area. Right, this is what we can look to do. And then we're basically trading this like our range plays. We're looking to trade it towards a value area high, see what the reaction is there, so on and so forth, right? But it really is kind of playing this day to day at the moment, especially when we have so many key news drivers. But from a technical perspective, Bitcoin isn't really telling us a lot here, right? We've got the range. Yeah, we can see very, very clearly since this expansion, price has settled in, lows of the range down here, highs of the range up here. We're kind of holding the range. So if we're back within it now, if we're looking at these as range lows, then expecting a push up in towards the midline, which would make sense because we've got the wicks up here. We've obviously got areas like this consolidation that led to price coming down to sweep liquidity at the lows. So I think a little bit of a relief bounce here does make sense. Now we're going to do two things here. We're going to look at the 4 hour to formulate a plan. Because what I explained, sorry, actually, let me just pop back to the daily quickly for a second and put these on. right? The only reason these were in here, just our previous TA that we've been covering from a while, the reason that we were targeting these lows. And again, look, we make an actionable plan every week. You can just check back through the live shows, or if you're a member at the Nest, you can look back through the reports. As soon as we lost this area here, this was the first point of interest to start shorting this into these lows, which we've been doing, which is also June's low down here. Why was this the case? Because we failed to kind of lose structure here. But what you'll notice is we came up, this is the prior all-time high. We had a pretty swift rejection at this point. At that time, you're then looking for bullish areas, in this case, like this bullish gap, which it was at the time, to support price and move up. And you see that not only did the buyers fail to step in here, they were basically non-existent. We look at that for a real sign of weakness. What was backed up was then when we created this bearish gap here, within this, making it a balanced range, ultimately offering very, very strong resistance and pushing down. But now we're at a key level where we want to be looking for potential long setups. All right. So I'm not looking to actively short into this. Maybe consider it if we got a pullback and then we started to see weakness on the lower time frames. But that's where we are with that. So moving to a 4 hour now. Right. The key considerations for me here are just this gap. I'm always trying to basically decant price action down from, first of all, we take the news, we take the fundamental drivers. We need to paint the economic picture for risk. Are we looking risk on? Are we looking risk off? Is this an environment that risk can thrive, in which case the chances of capital flowing into beta risk assets like crypto are a lot higher, right? So once we align that and we understand the landscape, we can look to set more high probability conditions for ourselves. Now, ultimately, I'm saying to myself, okay, the weekly's bullish, but we've rejected at high time frame resistance. Now we're within a bullish gap. We've swept a low that we were targeting. We've closed above that low, showing us some absorption, showing us buyers have stepped in, at least to some respect. So now we can start looking to frame potential setups on the lower time frame. The daily confirms what we were discussing on the weekly, that we're in an area that we could look to bounce. However, we need to accept the fact that on the daily and the 4 hour, we're leaning bearish. But we don't want to be shorting down into these levels. Now, the caveat to that is that in the way that I look at gaps, is we've rebalanced the gap down to here now. So until, the conditions become this 4 hour gap, right? Until we close above this here, in which case I think we can make a pretty strong move up here into the 105s before we kind of re-engage with this very similar area that we were looking at in terms of the breakdown on the daily. We had the bullish gap here. Look for that to support price. It doesn't. Price closes below it aggressively. It's almost a fractal of the daily, except price doesn't draw up quite high enough. We create this bearish gap within this here. Price ultimately getting stuck below this, and then it's our job to identify where the key liquidity targets are lower and where price is most likely to seek value. Okay, and liquidity. Ultimately, trading is a game of supply and demand, right? And if people aren't willing to part with this much money for Bitcoin up here, then we look for the next key area where they were happy to buy it before. So up here, considered a bit expensive at 109 regions. Down here around, obviously, the 100K area, people willing to step back in, and people will be willing to step back in lower if we get it. What we need to ascertain if we want to go bullish is where are people willing to step back in, or what's the moment that people are caught offside. What we're looking for from here is a short squeeze, right? We're looking for traders to be trapped offside, people that were late to the short move here, people that didn't short the highs, didn't short the retest or the breakdown, or even this area here. They're now down shorting into these levels. So we want to put them, or the bulls want to put them under the squeeze, meaning that they're holding these positions. We then need to find out, okay, where's our line in the sand? What are our conditions? This 4 hour gap becomes that. Now I'm saying, okay, well, how will the market respond? Price closes back above this and we start getting some lower time frame long setups, I'd be happy to take those, because people that were here, these shorts, say they're short from around these regions here, they're either going to be getting stopped out, or they will mitigate, or they will start to at least close some of those positions down if the market then starts to show strength. There's also the chance that they then flip those positions long, either to hedge or to actually just step in. They cut the position, think that they're wrong. New data comes in, they want to be long on Bitcoin, and then this is a good area for them to do it. So my conditions are really, really simple. Whilst we hold the bearish 4 hour gap, which is the one we're currently in here, I'm not actively looking to long, right? For me, I'm now looking to decant this down around about a 15 or a 5-minute time frame, look for strong structural moves, recoveries, market structure shifts with displacement showing energy and momentum that buyers are stepping in. We'll also utilize volume for that as well. We want to see rising buyer volume. Let us know that they're there. And until then, I'm just waiting patiently here. If I got some very, very clean short setups today, because if we're really showing a lot of weakness in here, if the NASDAQ starts to turn over, if we start seeing risk getting a little bit dicey, and especially if we start seeing our risk off assets starting to run, we're going to look at things like the DXY, we're going to look at things like the bond market very, very shortly, and especially the volatility index, the VIX, then we can look to be, a little bit more cautious about stepping on with the longs. We've got our conditions anyway, but it might encourage us to take some high probability shorts in here. Now, when we're engaging with gaps, something I like to see is like this, right? I know this is a weekly gap, but it's also a daily gap. Now, look how when price came into this gap, and we would obviously need to see this on its own time frame, which we'll look at in a minute, but look how we got this, you'll hear this term used a lot, like a V-shaped recovery, So see how price has dipped into this area and then came flying out. Remember the analogy about the pans of water, one's tepid water, one's boiling hot. You don't know which is which, and you're buying footage. You put your hand in the tepid one, you can keep it in there for a while. If you put your hand in the boiling one, you're going to pull it out straight away. That's how we want to see these reactions, right? Buyers stepping in with such strength that we see price violently reacting at these levels, right? Saw a similar situation here with the breakdown. This is very V-shaped as well in its nature. Now, and obviously this is a really, really good example here when we just tag this weekly gap, taking out these equal lows, right? Again, key liquidity pools. Now, if price starts to spend too long in a gap, then that can be a little bit questionable for me, right? Because what I'm saying is, okay, well, if price is really weak here and the sellers are just basically waiting to bite your arm off, then we want to see this start to break down quite quickly or start to see candles like this one, right? This is a beautiful example here in this little bearish gap, right? And, it would be grey like this one as well, but I do it for just to kind of show you guys, for anyone that's maybe not really that familiar with gaps, the bearish gap here, we're in a downtrend is caused between the bearish candles, the low of candle 1 to the high of candle 3, if there's a gap. You'll notice that there's no gaps in here because it's balanced, where this is a bullish gap because the high of candle 1 to the low of candle 3, we see there's no overlap in the wicks, all right? So this is a great example. When price drove into this gap, look how quickly it rejected. It did kind of come back up here. Think of it like a pressure relief valve. Accepted immediately, bang, sellers stepped in, right? People that were maybe buying here then start to drive the market a little bit higher to mitigate, to get out of their positions before, boom, stepping back on side with the trend. So these are the plans that we have. We need to see this closed above before we start looking for longs. Otherwise, we should be looking for longs when we engage at the very lows of this or this low here. However, if we do have a strong candle close here and we look to really start breaking down, there could be some shorts on, but we need to realize that a maximum level I'd look to be taking those would be 98,133. And that's because that's where the real liquidity rests, still within this gap. And I have no idea if this is a very sneaky move to induce even more shorts before we see a market recovery. Okay, so that's where I am on Bitcoin. All right, so remember, if it's of interest to you, none of this is financial advice, but for me today, that's how I've decanted the play on Bitcoin. What I'm looking for, price is reacting at the high time frame bullish levels. We're looking to step in here on potential longs if we close above this 4-hour gap, until if we don't, price ultimately is still bearish as I'm looking at this from an intraday perspective, and I will look for clean breakdowns to liquidity targets lower, but I will do so with caution because we are reacting at higher time frame bullish levels. Right, let's go and take a look at Ethereum, shall we? See how that's played out after what we were covering here last week with all these magnificent squiggles. I don't know where else you get squiggles as good as this, but let's clear a few of these bits up now. Just for anybody that's new, we use these charts here, right? They're not branded, they're not sponsored or anything like that, but basically we have just been keeping all of the information from all of these live shows on here. We don't delete anything, or I don't delete anything on here unless we do it live on one of the shows. Apart from that, that's just an old dot. And that's so that we have accountability over the decision making, and so we can learn from the plans that were made, what happened, and ultimately build, or continue to kind of build our knowledge on this. Now, as we're looking here, we're just going to have to forgive the mess on this chart for a minute. We can see hopefully what the plan was here. We'll look at it on the lower time frame. But while this was rejecting, we were expecting price to pull down to this low here. If we got the low pull down, we wanted to see price recover this quite quickly, which we'll look on the lower time frame. Ultimately, we got the opposite. Price did come back down to here, and then look at the retest of this level. Yeah. Again, key level, key wick low. Obviously, buyers were quite prominent there to step in and push the price high. When we get back to here, we want to see, like we were discussing on Bitcoin, price piling down and recovering with a nice long downside wick, but the body back above this level, showing us buyers stepped in. The body ultimately closed below this level. We created the bearish gap that was here, and we look at this area as an area of rejection at the low, and that's what ultimately we got with the breakdown. However, we will cover that in a moment, but I'm going to move to the weekly first. Right, so what have we finally done? We've finally driven down into this bloody massive weekly bullish gap that we've been looking for a while, and we've come back down to this key area of interest. Why was this a key area of interest? Because it offered key support here. When price closed below it, we retested it and sold off aggressively. We then ripped through the level here, meaning that if this has been a really kind of key pivot point here, we want to see these areas holding. We've got a big bullish gap here on the weekly. We've now had a decent reaction at this level. However, we do have a horrendously ugly bearish engulfing candle. And the reason that we were looking for price to move lower here was it was just stuck, right? When we got the inversion down here, we were looking for price to pump. It's what got us into some early stage longs that we did manage to turn into some swing trades in the end, but still quite tricky catching most of this on the way up. Some of the moves were incredibly fast, but the team did a great job on the swing front. I focus obviously on the intraday. Then we were driving up with a target of this order block here, or this area of supply. That was the big breakdown. We failed to retest that when we started to see the consecutive long upside wicks on here. It was just a sign that price was just really trying to drive up into these areas, and all those bids were just getting filled. All these asks up here, and then people bidding hard, and look at all the collection of doji candles. 1, 2, 3, 4, 5 weekly doji candles on ETH after the great promise of this final expansion, after it was massively underperforming, and then it just sat flat. Now it's flushed everyone out, which will frustrate people. So we need to put our heads on and look past the noise and say, okay, people are frustrated. People are seeing the geopolitical escalations. People are starting to ask themselves all kinds of questions. You will get people late shorting this. So it makes sense to bounce here and put those people into the squeeze, right? So as we look at this here, we can see a similar thing, really kind of long breakdown here. Now, it doesn't always pay. I'm going to show you this example here, but when you have a really, really hot expansion, very difficult to get involved, but you're basically just longing into resistance here, right? So what will happen is you'll see these sharp corrective moves down, taking out late longs, and then price normally steps within a range. I think the little issue with this one here that we're seeing is if we look to the range here where we had the consolidation, it's now looking a little bit like this is the manipulation to the upside, right? And now price is ultimately distributing lower. So you would look at this as a typical power of 3 move where you've got your consolidation, your manipulation, and then your distribution. So we do want to watch that. This was a really, really clear key indication when we closed below this gap here that price was going to get stuck and move a little bit lower. Now, what does that mean for today? Well, on the daily scale, one thing I was going to say here is when you see these large expansions, I wouldn't say this is as aggressive because it's a lot more staged, but we typically want to take a Fibonacci out for these and see how price is reacting, right? We've really, really held the 382 here, normally a sign that a trend is fairly strong. But what I'm really looking for is price to come back down below the 0.5 and ideally to and around the golden pocket, all right? Now, we didn't get that here, right? But you can see how the trend was just losing strength here. It just started to consolidate. Even if you're extending the range up, we didn't come down to the 0.5 point until now, right? So if we're looking at this expansion leg or this impulse move higher, and I'm taking it because this is the consolidation that led to that really large pump, price consolidated in here, I've got no new clear and obvious ranges. We can see how the reactions currently come at the golden pocket. So if we do see that we get some kind of decent reaction here, then again, I think we're in a weekly gap. ETH is looking okay here. I think we've had a reasonable correction. We're holding support levels, but we do really need to see some strength starting to step in. Now, the other way to look at this is that we've taken liquidity from the highs here and the lows here, making this an impulse move lower. So if we want to overlay that information, then what could we look to do? Well, if I'm looking for price to, after a strong move lower or a strong move higher, I like to see price have around about a 50% retracement, because it just shows that the trend has cooled off and it gives me a good area of risk to reward to step back in. Otherwise, I'm just chasing these trades higher or lower, and that becomes very dangerous because our risk to reward is off. So if I'm overlaying the same two, let's just do this. Just so it kind of cleans it up a little bit for you guys. Let's just do this for a minute. Erica, this will make you laugh after being a member at TVN for so long, watching me just put these random ones on the chart, right? So we'll get that back live in a minute. We're going to turn that all back on, okay? So this is what I'm discussing here. I'm looking at this impulse leg higher that's creating this range. These levels seem to be getting respected pretty well. We've come back down below the 50% now, and we're reacting at the golden pocket. Great. So if I am expecting price to have a reaction here, then where to? Well, like I said, I like to see the idea that this is going to retrace around about the kind of 50%. Now, it doesn't have to, obviously, and in particularly strong trends either way, it might not. So all I'm going to do here is I'm going to mark the 50% retrace here on the Fibonacci. Right, we'll do that nice and thick. And then I'm also just going to draw a box here across the golden pocket. Now I'm going to get rid of the fib. I'm going to get rid of this fib as well because we know the price is reacting at this key level. So we're asking ourselves, where are we looking for it to move to? Well, if we are going to sustain the move higher here, and I really do like it, we know we're in a weekly gap. We got this big, beautiful daily bullish gap below us here as well. So just draw that in green for a moment. So good area for price to spike down into, which we've done, recover, and then move higher. One thing I don't really like are these inefficiencies here, these gaps. These are clear areas that price could reject from. On an intraday basis, it's really not that bad because it looks to be pulling up towards these. We could get some scalp longs into these areas before potentially looking to then trade it the other way. But what I see up here, and let me just do this in a different color. What I see up here are some areas of interest that price really could be looking to draw towards. Now, we're not going to get it up now, but we can also look at our liquidity heat maps using everything from CoinGlass to the wonderful team over at HighBlock and people like that to see where we're kind of getting these levels mapped out, or you can look at the order books and bits and pieces as well if you do that. So if I get some decent long setups from here, I can see how, we can look to some plays. So with that information now, what do I want to see? Well, this is actually looking a little bit better than Bitcoin here, right? Because although we have a much skinnier gap, it was a bearish gap. Yeah, rejected price here. Again, look at how price kind of engaged with this gap. See a strong body close, small downside wick here. Then we came in. That actually was a decent reaction here, thinking that this thing could be then looking to lean a little bit bearish. But the close above this area here, we've now inverted this. So my conditions now for ETH are really, really simple, especially looking at this from an intraday and building that up, is we've had a nice reaction down here. We've swept out this low. Always like to see liquidity taken in these kind of moves because it shows you buyers have stepped in, stops have been activated under there. These are good areas where there's normally a lot of orders, so people can fill their boots here. And now we're above this area, so the condition becomes really, really simple. As long as we're holding this area here, I can look for long plays up into these gaps. Yeah, obviously I know that's going to be more of an intraday kind of setup. On a 4 hour like this, you need to see some kind of structural recovery, in my opinion, if you're looking for the higher time frames. Yeah. So you want to see price above this here, and then you see it's something like this, right? A little staged approach as price starts to move higher. You look for the structural shift, and then within here, you can look for your order blocks, you can look for your gaps, support and resistance flips, areas, high probability areas to step in, all right? So let's just clean that off. If price comes back down, violates this and closes below it, then I'm targeting shorts deeper into this area at 2115.55. Verity Life, hello mate. What about ETH BTC? BTC dominance is so strong. Yeah, ETH BTC is. Right. Let's have a look. None of this. Look, I mean, it's just been this absolute cascade, hasn't it, for a while? But then we kind of see this recovery now. Funny because look at ETH versus USD as well. How we just had these weeks of doji candles, except this one had even more pressure coming in from the tops. If I'm looking at it purely from a technical perspective, yeah, then I'm saying, okay, well, is basically very, very similar to what we're seeing on Bitcoin and on ETH. We're holding these weekly gaps as we move down into the daily. Yeah, price moving down into here. I'm very, very cautious towards alts, typically, especially if they're stacked against BTC at the moment. Market conditions, I think, probably still a little bit too risk averse for that. I think once we see, either some settling or some, fiscal stimulus, something like that coming in, then maybe we kind of see that. But just purely from a technical perspective, we've got a very similar situation here. We're holding daily bullish gaps to the left. We're holding a weekly bullish gap within here. We haven't seen a localized sweep here on the daily. We've got pretty much exactly the same gaps that we're looking to draw up to in here on the 4 hour. This is kind of creating a little bit of a rounded bottom here, and I do really like these long downside wicks, but I don't have any kind of actionable setup here because of this massive bearish gap that's above. Obviously, is the way that I look at the markets, right? So unlike with ETH, where we had the gap down here and we'd inverted it, we can now look at that as support. We can take longs from that support to liquidity targets higher. If we break down and close below it, we know where our targets are lower. I think the one thing to say about this short term is that these gaps really do offer a nice draw on price, even if they're very minimal, right? Example, especially when you have very clear and obvious ones. Market draws back into these, and then if it's really that weak, and again, remember our analogy here, see how price could barely spend any time in this before climbing back outside, showing you weakness there. So short term, I think this is drawing higher towards this, all right, but I would be very, very surprised if we don't see further rejection from this moving lower. Definitely in the kind of short to medium term, but I think that could be a draw on liquidity higher for sure, but we would really need to see some recoveries here on ETH BTC. And then just tearing again still at the moment. I think the landscape's changed a lot. I know a lot of people, I'm not saying this is you, Verity Life, my friend, but just saying that it's a lot of people are asking that same question about alt season this year. People really seeing those past alt seasons and also kind of really being overhyped on social media platforms where back in the day, and I was never a very good crypto investor, by the way, right? I'm a technical trader, come from a traditional market background, so that's I'm decanting news and fundamental drivers into technical charts whereby we can take and manage risk positions to the plan always to end up richer at the end of the year than you were at the start, right? But in terms of like just punting on loads of random crypto assets and making small fortunes in low caps, that was never my bag, right? And I think this year, when I decided to get better at it, I should have understood quite clearly that it was always going to be an uphill battle, right? When we look at all the changes, you look at the ETFs, you look at the mass adoption of Bitcoin from institutional buyers and that now as well, it really is changing the landscape. You also look at the oversaturation of the altcoin space and how many of them are launching. It becomes so much harder to find these quality products. That's why we have such a good fundamental team like my boy KZM, who's over with us, finding just these when these markets are collapsing, just finding these 2, 3, 4x plays. But he'll be the first to tell you that it's a very different environment. Even when you're finding those, you're getting in and out of them very quickly. The previous cycles, you would just hold these things. You get in as early as you can, hold a massive, a variety of different things across your bags, and then just wait for some of them to do 10, 20, 50x, for example. With Bitcoin dominance this strong, we can see why we're really kind of smashing our head into a brick wall at the moment. While this continues to tear, we're really, really going to struggle with alts, obviously, apart from, the caveat is you will always get those kind of outliers as well. Good morning to you as well, mate. Good morning. Burnside, have a good day, my friend. Thank you for popping by, as you always do. The Micro Psycho, how are you doing? What is up, brethren? Yeah, good. Actually, very good. Thank you, mate. The team have been performing exceptionally well. In fact, I'm going to show you something in a minute that makes me very, very, very proud. But we will get over to that in a moment. But yeah, very good. Thank you, mate. I hope you are doing well too. Of course, we have time to look at Soul, mate. Anything for you, my friend. And guys, if you do have any other requests, just let me know. I'll try and take a look at as many as I can before the show comes to a close in about 15, 20 minutes from now. So yeah, that's thoughts on Bitcoin dominance. I think that's a good ask there, Verity Life, to check that. I know I don't really cover it tons at the moment. It's just because Bitcoin's so damn strong. It's a very, very difficult landscape for alts. Now, what I want to cover is a few more things. All right, let's take a look at the NASDAQ. Now, this is the reason that you've got all this dotted nonsense is because nobody was trading the NASDAQ. It's the forward current contract, all right, that runs out, you'll see down here in September. Well, not down there, over here in September. All right, it's just recently changed. We've had the contract turnover. So just looking at this in here, right, you can see on the daily scale, this is just fighting such a good fight to try and stay positive, right? NASDAQ. Obviously, it's still super bullish, but look at these large expansions, small contractions, consolidations, large expansions, small contractions. And then look how it's kind of stuttering up here. It's just facing a very, very difficult landscape considering the geopolitical risk, considering everything else that's going on. Just wanted to cover this very quickly. You're welcome, Craigie Boy, on a daily scale. Now, what I found really interesting here was obviously there were escalations geopolitically over the weekend. We're not going to make this a politics show. I feel very, very sorry for anybody, by the way, that's caught up in that. You know, wars are never fought by the people that start them, unfortunately, and it's always innocent people that suffer. And that's all I'm going to say on the matter. All right. So I don't want to make this anything more than it is. You know, it's a trading show ultimately. But we do have to factor these things in, as horrible as they are sometimes to, you know, to admit and discuss. Now, price gapped down here, which was to be expected, right? So price gapping down here, the US obviously stepping in now to the fray, not just actively bombing targets, but providing a lot of support, very actively and openly doing so. The market's gapped down. What was really interesting was to see Asia then step this back. Then we've had the gap fill, yeah? Now the market moves higher. And now it's just started to come back down again in London. Yeah. So it's a little bit flat at the moment. Looking at this on the 15-minute, just really trying to envisage what the intraday setups are. But ultimately recovering these gaps is quite a positive sign here. So we flushed out the lows here. And again, if we're looking at this, if I'm looking to say, okay, where does the action sit here? Now I have a slither, and I mean a slither of a bullish gap below here. And even if you're not into NQ, if, you know, this is, by the way, sorry, the NQ contract is the NASDAQ minis contract. Even if you're not into these as a tradable asset, understanding what they're doing can help you so much because, you know, Bitcoin, crypto is so correlated to risk markets. This is a good area of support for me, right? Because this is where we had the inversion setup come through. I think this drive below, this was gapped and then it was very, very quickly recovered this area, right? So I think that's still holding valid. So while we kind of hold this area here on NASDAQ, I think we could still see some progress higher. Now, there's something I do just want to cover. So looking and collecting all the news sources later, a couple of members, and I got a few messages from people as well asking about my thoughts on oil. I do track oil. You can see it down here. All right. And this is crude oil futures, right? But the reason that I just wanted to cover this quickly was because, and people asking me, why is this becoming quite a hot topic at the moment? The reason is because of the escalation in Iran. Now, one of the biggest things that Iran can do to weaponize what they have is the Strait of Hormuz. So if they look to affect that, then there can be big problems. They can also obviously affect the production of oil, which can put a little bit of a squeeze, drive oil prices up, which would be a disaster for the US. You'll probably hear people talking about $120, $130 a barrel crude at the moment. So you can see it's down in the kind of mid-70s region. That would be a disaster for the US because it will drive inflation up. It's going to put the cost of everything through the roof, which ultimately will then get passed on to consumers. So that's a Trump, oh God, terrible pun there, which wasn't meant to be, but that's the trump card that Iran have in their pocket, is that holds a lot of sway and a lot of power with them. So the reason a lot of people are looking at this situation for any escalation is if they start to weaponize the Strait of Hormuz. So if that does happen, then obviously we're going to see a spike in oil prices, uncertainty will rise again, and risk assets are going to take a little bit of a hit. So just even as we're looking at this, we can see how kind of uncertain the whole kind of risk on, risk off landscape is at the moment. All right, we've seen the dollar really kind of thumping a lot higher as well now, so strength really coming back into that. That's back in the upper side of our range here as well. So looking for this to drive towards the 99,832 area. Yet we're still seeing bond yields rise. All right. And especially at the long end, that's showing that investors are having a lot less confidence in the US over the long term. So they're having to pay very high yields on them, sat at 4.9% at the moment, meaning that if you're buying up government treasuries, bonds, the 30-year, for example, then you're getting paid almost 5% interest a year just for holding them. Now, obviously, the problem is if the bonds really heavily devalue over the next 30 years, which is what a lot of people are predicting. However, very, very difficult to kind of see that far forward. Anyway, that I just wanted to let you know that because that's a lot of the things I'm plugging into this. Some other people were asking here as well about the Magnificent Seven, which the only reason tracking these play so much into the NASDAQ that it's good to understand where these are, obviously, from a pre-market perspective, and then see how the market's open to see if strength is running into risk assets and just ultimately helping us paint that picture for risk. So let's take a look at Solana. For our friend Craigie Boy. Solana, one of our most colourful charts. This was really interesting. I'm going to delete this now, but we were looking at this in terms of where the heat map liquidity was, and it really did just absolutely ping to it like a bullet. Doesn't always work like that, by the way. You really need a lot of context to understand with the heat maps and stuff, right? But, liquidity mapping, sorry. But that's the reason we deleted that. Like I said, we don't delete things off the chart unless we do it live on the show. So we keep ourselves accountable, or I keep myself accountable. Now, this might look really, really messy here, but let me just give you the context if you're new to this. This was a large but key area for me. This was the real key resistance area. Once we popped above that, February 24, we just held this level. We deviated below this, came back above it. Explained on the shows why I've added Solana at these levels. All right. For me, it's just been an excellent level for quite some time now, all right, to hold those through. But the weekly doesn't really tell us a ton more than that at the moment. We have just dipped back into this, but this is obviously just an area. We want to see liquidity targets within these areas, all right? But Sol had a really nice, move higher here. We were targeting this bearish gap here, which continued to suppress price ultimately then breaking down across the different levels. I think you can probably work out what these are. We were looking for price to invert gaps here to move higher. Once pinned below, we're looking for lower liquidity targets. We did have this run here, which caught me offside a little bit, but we did manage to get back in when we got back above here around about the 51s. But still, bullish gap, close below. We always look at these to perform, to act as resistance, first of all, unless we see that strong close above. See a long tail wick like that, and then a bearish engulfing candle, which closes below the body of this one here. And our expectation is that price is seeking fair value lower. So here on the daily scale, have we got anything else to really hang our hat on? We haven't come in for this low here, which is a little bit of a concern. I think this will be a good low for price to find some liquidity if it needs to move lower. It's a low within a gap here, consolidation that led to a really nice move higher. So, price coming down for the liquidity below that before a recovery would make sense. So maybe we see a move down into that 123.51 area. But there's not tons clear here on the daily apart from that. So I'm going to really kind of lean quite heavily on the 4 hour. And just as we saw with Ethereum, now, it is a little bit of a skinny gap, but we have a skinny gap inversion here. We've driven into a low. This is exactly like ETH, actually. We've swept a low. We've had a beautiful bullish reaction. We've inverted this gap here. Ultimately price action here at the moment is a little bit ugly because we do have this bearish gap here. So, really though, it still gives us good conditions. Close this candle above here and flip this to support. We look for this area to hold and drive higher. I think we can make it up towards the equal highs here at 142.59. And also this gap, which sits a little bit higher. But while we're kind of holding here and we do have higher time frame liquidity targets lower down, intraday plays trading this lower down into here, I think, are probably the ticket. But looking to kind of get involved in this a little bit more, again, depends what you're doing. Are you holding this for a spot bag? Are you looking to hold this? You're looking to leverage trade it. I think leverage trading at the moment is still very, very dicey. However, as a spot holder, I'd be happy to add some more down here. Yeah, absolutely. That's the liquidity target that sits within our area of interest. So I think that's going to be a good level. But I'd want to see price kind of close above here and then utilizing this area as support around the 134.6.8, 134.68, 134.7 area. Get price above here, get it established, and then looking to the lower time frames to see those structural recoveries and price ultimately then looking to push higher. Like I said, towards these highs here and then towards this inefficiency within here. Aside from that, really, I think, we need to keep our eye on the news. We've got another fairly turbulent news week this week, right? So we do want to show a little bit of caution towards that. All right, legends. Well, look, just over 3,000 of you live, 3,100 it just ticked over. So thank you very much for all joining me on Monday, 23rd of June. We've got our plans laid out for the start of the week. All right, so let's see if we can show that strength that we want to kind of reclaim these kind of areas, or like on Ethereum, for example, if we can hold the areas that we have claimed. Let's see if we can build some short-term, maybe kind of starting with intraday plays, looking to probe higher. We can keep a large share of that back. We can look to add, if we see strength come into it, look to maybe develop them into some medium-term swing trades. But like I say, at first, we need to see those conditions met, and hopefully they've been laid out pretty clearly for what the plan is for that. The micro psycho, hell, that is one great long update. Let's see what you've got. Best to wait until 5th of July. Markets can be very unpredictable for the next week and a half. If we get up as high as 104,400 before the end of the month, I'll take a short to around 95k. Lots of unpredictable volatility swings, violent swings and changes in frequency and volatility income in the market. Really shake things up down there. Definitely can. Yeah. Destroy leverage price to rocket to 120 area, bull trap, dump to 80, possibly 70s without a straight down. Wild swings ahead. Let's see, mate. Like with everything in trading, it's all very possible. I think that's what keeps us all so addicted to the space, and ultimately always students within it. All right, legends. So do have a fantastic week ahead. Been great. Thank you all so much for your support. If you do want to know more about what we do over at the Bird Nest, you can find a link in the description, and you can always reach out to me on Twitter at BC_Richfield. Have a fantastic week ahead, and I look forward to seeing you all again on Wednesday for our Alt Request show.